MicroStrategy has inside it some leverage, right?
Mm-hmm.
And so, but unlike a leverage position on a derivatives exchange where there's a liquidation price implied, which is risky,
Mm-hmm.
MicroStrategies, you've outsourced the leverage to them, right? So the reason they can outperform Bitcoin, other than these corporate actions, which we can talk more about, the bonds and so on,
Mm-hmm.
is also partly because they have leverage and because of the flexibility of the things a public company can do, or even a private company to some extent. They are able to negotiate and have very, very hard to liquidate leverage. And if the price is going up in the long term, that can pay dividends.
Adam Back makes a sharp point. In the Bitcoin era, the measuring stick has flipped. For decades, investors compared returns to a risk-free rate like US Treasuries. Now Bitcoin itself has become the hurdle rate. If a long-term investment can't beat Bitcoin over 8, 10, or 15 years, the smarter move is simply to hold Bitcoin. That logic is driving companies to rethink cash reserves. Why sit on depreciating dollars when you could anchor in an asset that consistently outpaces almost everything else? This is exactly where MicroStrategy carved its niche. While many on Wall Street dismissed or criticized its Bitcoin-heavy approach, Bitcoiners recognized the brilliance. Even if mainstream fund managers balked die-hard holders could step in. By shifting even a sliver of their Bitcoin savings into MicroStrategy stock, they could back a company aligned with their worldview. That base of support helped insulate the firm when skeptics questioned its valuation. Back also highlights the embedded leverage in MicroStrategy's model. Unlike speculative leverage on exchanges that comes with forced liquidations, this leverage is corporate and far more resilient. It can't be unwound overnight, and if Bitcoin trends upward, the gains multiply. That's the unique appeal: exposure to Bitcoin's upside with an added kicker from leverage, plus the chance to benefit from trading opportunities when the market misprices the stock relative to Bitcoin. For those who believe in Bitcoin's long-term trajectory, MicroStrategy represents more than a company, it's a levered play on the future of money. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
So typically the hurdle rate is going to be based on the US Treasury rate or something.
Mm-hmm.
But with Bitcoin, I'm thinking, well, no, that's incorrect. Bitcoin's the hurdle rate. If you're doing any other form of investing that's long term, if you can't outperform Bitcoin, you should stop and buy Bitcoin. And then what does that mean for a company? Well, it means you should put your cash reserves in Bitcoin, because you're not going to, it's very, very hard. Very few companies over the long term have even come close to keeping up with Bitcoin, because the historic rise has been so meteoric, and we all know the metrics of the history, right? Best performing asset class of the last 15 years, 10 years, 5 years, pick anything you want, right? I mean, very short term, not so much, because you've got macro volatility, market drawdowns in the cycle, but any kind of 8 year, 10 year, 12, 15, it's just clearly being everything. And so, anyway, so with that, I thought that's a good mission. How can an individual help? And I hit on the idea, well, if we buy some of his shares, like individuals and other Bitcoiners buy up some of his shares, and if Wall Street doesn't understand it, the fund managers, mutual funds, people who hold big baskets of shares would maybe not understand it or take a dislike and hurt the share price. And the Bitcoin is collected. It's not very big compared to Bitcoin at that time, right? Bitcoin's market cap is probably $1 trillion, and MicroStrategy was a few billion, right?
Mm-hmm.
So it's tiny. So it doesn't take that many Bitcoiners to buy a small percentage of their Bitcoin savings, convert that into MicroStrategy savings. So I figured, well, if we did that, we could support it, right? If the traditional finance doesn't believe, we do, we'll buy their shares, and we'll provide a kind of. I think it's important for a company to have good shareholders, basically, right? So that's why I started. I'm also a somewhat active trader, but I only really trade Bitcoin. And when you end up being all in, it's pretty hard to trade Bitcoin.
Right.
So then I thought, hit on the idea of using it as a swing trade. So you could, sometime in there, the MNAV concept was put together. by MicroStrategy itself, I think, and just the market cap divided by the net asset value of the Bitcoin they hold, and that can vary between, I don't know, 1.5 and 3.5 or something like that. You can find graphs of the history. So it occurred to me that you could watch it for a while, see what ranges it got to, sell some Bitcoin and buy it when you think the MNAV is low, and then when you think the MNAV is getting a bit high relative to previous history, you could sell the MicroStrategy shares and buy back your own Bitcoin at a higher price, but end up with a few more Bitcoin than you started with, right? And so that becomes an interesting trade. A MicroStrategy has inside it some leverage, right?
Mm-hmm.
And so, but unlike a leverage position on a derivatives exchange where there's a liquidation price implied, which is risky,
Mm-hmm.
MicroStrategies, you've outsourced the leverage to them, right? So the reason they can outperform Bitcoin, other than these corporate actions, which we can talk more about, the bonds and so on,
Mm-hmm.
is also partly because they have leverage and because of the flexibility of the things a public company can do, or even a private company to some extent. They are able to negotiate and have very, very hard to liquidate leverage. And if the price is going up in the long term, that can pay dividends.
Mm-hmm.
So that was my thinking for buying and then start to swing trade it.
Adam Back points out that Michael Saylor was the first public company CEO bold enough to put Bitcoin directly on the balance sheet. What's striking is that for years no one else followed even after MicroStrategy began holding annual events to lay out the blueprint. They openly shared the accounting methods, the legal framework, and the strategy so other companies could replicate it. Yet adoption from other corporates remained minimal. Back explains that Saylor's move wasn't just about chasing upside, it was defensive. In the COVID era, governments unleashed massive quantitative easing, rates collapsed near zero, and inflation took hold, particularly in asset prices. MicroStrategy sat on roughly $500 million in cash, a cushion meant to cover downturns and fuel future growth. But Saylor realized that cash was quietly bleeding value. At the pace inflation was eroding purchasing power, those reserves could lose as much as 90% over a decade. That pushed him to seek alternatives. Real estate or gold offered some protection, but for a public company, they came with hurdles: complex management, limited liquidity, and less transparency for shareholders. Bitcoin, on the other hand, offered simplicity, liquidity, and a direct hedge against the monetary backdrop. It became the defensive play. Let's get back to the interview.
I mean, my initial reason actually was, of course, Michael Saylor was the pioneer, and nobody followed him, to my surprise, for quite a few years, right? They started running annual seminar days for company execs to provide the playbook and the accounting and all the factors that went into enabling them to do it, to help other public companies do it. And it took a surprising number of years before any other public company entered the space, actually. So that was a little bit surprising to me. But once Michael Saylor started doing it, I thought, Bitcoin's got a lot of mission-oriented stuff in it, right? People are going out of their way to, explain Bitcoin to extended friends and family, people they encounter, and it doesn't do them any direct good, but they want everybody to enjoy Bitcoin and benefit from it, right? So I thought what MicroStrategy was doing, was now strategy, was a useful new track on that, right? So he hit on the idea of a company using Bitcoin as a, in a period of high inflation and quantitative easing, as a way to protect their cash reserves from inflation. And at
It's
the
more
time,
defensive.
I think it's purely defensive, and he's been very transparent and talked at great lengths about the thought process along the way. So you can kind of, if you listen in, read some stuff, listen to some videos over the time, you can get a quite clear picture of the thought process that got him into Bitcoin at all in the first place, right? Because his resolution to buy Bitcoin personally and then work through the process of buying it in the company was his first entry into Bitcoin. It wasn't like an old, a person who's been in Bitcoin for years. And that was really because of the, as defensive as you say, because of the COVID era, whereas enormous amounts of quantitative easing, the interest rates were pushed to super low. And, for anybody kind of looking at investments, of course, you're aware of the asset price inflation, and, you'll have a view on whether the government official inflation metrics match reality. And there are independent organizations that try to, Trueflation and things that try to put a number on it. But it depends what you're talking about. It depends if you're talking about the average person's basket of expenditure, or if you're talking about sort of savings type money and things you might want to buy with that, like real estate, right? So if you're talking about that, I think the inflation rate's even higher. And that's the area that Saylor is focused on, because operating MicroStrategy for a great many years in the business intelligence sector, and I think he might actually be the longest like continuous public market CEO in the US or something, right? Because
I think so.
became a public company CEO at a kind of interesting story when he's pretty young, which I'm sure people can find if they look around for it. But anyway, so he had I think the company metrics at the time, its market cap going back a few years before they got into Bitcoin, varied between 1 and 2 billion. They had, I don't know, I think something like 500 million revenue. They had 500 million cash reserves, and it's like 1,700 staff, something like that. You'd have to look on their website, and 500 million cash reserves, to get them through market cycles, to fund, new product initiatives or pivot. So I think they have a kind of web transition now, right, where they're trying to do more web and then they're trying to do AI. So it's continuously evolving, this kind of business, right, to keep up with the times and what people expect. So they've got to have a cash reserve to get through market conditions and to take product initiatives that are bold. And so he got pretty concerned during COVID that, wait a minute, that 500 million next year, it's going to be 425 in inflation adjusted terms. And this is terrible. Run that for 10 years and we will have lost 90+% of the spending capacity and the reserve capacity of the company. And so I think he was holed up, chatting with a friend because travel was difficult. And Eric Weiss, who is a fund manager, you've probably spoken to him at times.
Yes, been a guest, yes.
He suggested, that they were looking about anything, like could buy real estate, could buy gold. Public companies can't necessarily buy some types of assets. And Eric Weiss said, well, what about Bitcoin? So then they went down the Bitcoin rabbit hole. And then, Saylor personally bought Bitcoin and went through the process of getting the company into it, which was kind of elaborate. I think they offered, a kind of buyback offer. Like this is a pretty dramatic strategy shift of the company, that they offered to buy back the shares at a favorable price for anybody who didn't want to, participate in that. And so they got a bit of shares bought back, and then like 275 million, something like that. They immediately bought Bitcoin with, and he went on the financial news shows to explain what he did and why he did it.
Right.
And I watched that with interest, and I had the expectation that you'd see him on the financial review shows for a couple of days, and that would be it. He'd go back to his, managing his strategy business.
The idea of a balance sheet used to be simple cash for stability, bonds for yield, equities for growth. That framework is cracking. A new yardstick has emerged, an asset that consistently outpaces the safe choices once trusted to guard value. One company leaned into this shift by reimagining its reserves, not as dead weight slowly eroded by inflation, but as fuel tied to digital scarcity. The move looked reckless to traditionalists, yet it set a precedent. Capital can now be stored in a form that doesn't just sit still but compounds with resilience over time. Unlike speculative leverage prone to wipeouts, the structure embeds staying power, amplifying gains when the cycle turns upward. For investors, it offers a hybrid exposure to the upside of a new monetary standard wrapped in the framework of a public company. The lesson is stark: what once passed for prudence now risks being negligence. If corporate treasuries truly face a world where sitting on cash is slow motion decay, the pressing question is whether leaders will adapt by choice or wait until survival leaves them no alternative. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.